Hello and welcome to Real Day Trading. This is now day 4 of the 5K challenge. And one thing is really starting to dawn on me here. It didn't fully hit me on the first challenge because the first challenge was easy. The first challenge took 3 days. We had a nice bullish market, bullish trend, 3 days, not that difficult. This market, very choppy, very unpredictable, other than you could predict it's going to be choppy. It is almost impossible to get ahead if you are under PDT rules. I used to think those rules were there to protect traders, and in a way they are. It protects traders that don't know what they're doing, and they come in and they make day trade after day trade after day trade, and they get wiped out. But for everyone else that took the time to learn how to trade, to find their right method, who are they protecting there? Because those traders who might not have $25,000 to put in the account and should not be using a cash-only account, and there are posts as to why. I won't go into it now, or else I will get off on a rant. Nobody wants to see that. Those traders are handcuffed because you get messes like this. Today we open up, futures were down, right? And okay, looks like it's going to be a red day, but no, there's a reversal. Great. All right, so you start getting bullish here. But you don't have any day trades left because you only have 3, maybe you use them. I did. I have 0. Consolidate here, but that's okay. It looks like a bull flag. And then, bam, we drop. Right? Now, I'm looking at this pattern and thinking to myself, all right, unless I see a bullish hammer here and then an engulfing candle and take out at least half of this red candle, I am going to have to rebalance the portfolio and add a short. And the only position I had to do that with was NVDA. I had an Amazon Butterfly, but that was not going to give enough buying power. So NVDA, because that was the only one from yesterday I still had on that I could close without triggering a violation. So there I was, ready to get rid of NVIDIA and probably short Shopify. Sounds like a decent plan. I still had some longs on, particularly Apple, but rebalance it with some shorts and off we go. But NVIDIA starts showing really great relative strength here. And now I'm looking at it going, well, now I have a position that SPY is dropping, but NVIDIA is not. I'm not going to get rid of a long that has all of a sudden great relative strength. Well, because of that, I kept NVIDIA on, and you see what happened. NVIDIA went up, and you see what happened with SPY. SPY went up dramatically. Huge green bar here. So much that this looks bullish going into tomorrow. But who the hell knows with this friggin' market, right? So I keep on NVIDIA, but if NVIDIA did not have relative strength, or I had a different long other than NVIDIA on, I would have closed it and taken chop. And what would have happened? This would have happened. That short would have gotten hit hard. I'm sorry, not when I say shop, I didn't mean shop. I meant spot. That's what I meant. Spot. Shop. I keep saying shop. I don't know why. Spotify. It went up $2 from where I said I was going to short it. Actually, almost 3. That would have been a bad short. And I would have missed out on a huge $5 gain here. So if I was ready to do that, and only because I was lucky enough to have a position that had relative strength that I didn't, I can only imagine how many retail traders are getting screwed in this market. It is very difficult. And the only way to win it is to be patient and stay in the direction that you're choosing because you don't have flexibility, but it puts you at serious risk that if that direction reverses, you are in trouble. In fact, I can tell you that if we look at all of the positions that we had since we started this challenge, if we were able to day trade Etsy, HON, SENS, Any, Snap, Amazon, CVX, and Coin, mainly Coin was a huge one, all would have been hugely profitable. This like 5K count would be around, I figured it around 11,500 if we had the ability to day trade. 11,500 in 4 days. 5K to 11,500 in 4 days without the restriction on it. But instead we're at 3, down pretty much 2K. So what did we do? What did we do today? Well, at 6:30 a.m., it was unseasonably cold out. So we got ourselves a nice cup of hot cocoa and sat down to close our CVX short call. Not really. I kind of just zombie-like walked to this computer, drank coffee, and closed CVX. But either way, however you want to envision it, or don't envision it at all. That would be weird. Why would you envision me getting up and closing a position? You wouldn't, right? So let's just put that out of our heads. CVX, here it is. I closed the short call, which turned out to be a mistake because CVX kept dropping. We had some sector weakness today. You can see here on CVX, there was some sector weakness, and it dropped like a rock. Even though SPY was not terribly weak, in fact, SPY started going up. CVX kept dropping. Finally, it stabilized and came back up a little bit. I quickly put another short call on it, and I put it right on top of it. I put a 137 call because I wanted to get as much credit as possible there. Figuring out the stock as weak as it is right now and the sector as weak as it is, tomorrow I'll probably be able to take some profit off of that position. So, CVX, the play here would be tomorrow, close the short call, hope the sector strength regains, and if not, hope SPY is just strong enough to drag it up, and then get back into profit on this position. Okay. We took profit in FAST and in GOGL. Both of those turned out to be the right plays. FAST here took profit at the right time. Actually, we took profit down here, and FAST wound up going up. So good thing we got rid of that. GOGL, we probably could have had a little bit more profit. We took it right around, let's see here. We cashed in on that at 7:47 a.m., so 10:47, which would have been right around there. 10:47, right there. Right. So, okay, we missed about 5-6 cents on it. Otherwise, it pretty much could not have closed those two positions in better timing. Going back, I used the money from there and took out 2 different calls, one on Macy's and one on NLOK. So let's take a look at those real quick. First, Macy's. Macy's, we had what looked to be a breakout of the 100-day moving average here, and it wound up closing just below it at 26.51 is the average. It's 26.45. So this one here is a little problematic because this is resistance. I got it up here, but it didn't hold the line. So it wasn't able to confirm the break of the SMA. And that was a tricky one because the stock lost relative strength right here. Right there. Lost a lot of relative strength. Not much you can do on that case. I'm going to lean a little bit on the daily chart that we have some support here and some support over here that this here is touching. As you see at this, I'll show you. Actually, I can even start it from here. There. So there's several lines of support on Macy's. I'm not that concerned about it, but not exactly happy it didn't go there. So I'm going to keep a close eye on this tomorrow. And then we had just a non-stop. This stock just kept going and going and going and going. It was an incredible play, which we were about almost $200 in profit on just these calls. And if tomorrow, given this daily chart, I mean, look at this. This is huge volume, stacking green, closing near its high. This is exactly the type of stock in a small account you would be looking for. You'd be looking to buy options at a delta of around 0.6 to 0.75, or even buy the stock. This stock is extremely strong. So happy with that position. Go back here. I then bought Apple. Once again, dipping back into Apple. 175 calls. I got 3 of them, and then I got another one here. So I have 4. Averaged out to our $1.16, $1.16 per call. Those calls are now going for $1.40. So yay for us. Apple, one of the stronger stocks in its sector. You can see here, point of resistance on Apple is 176.45. We have not hit that yet. So we have relative strength. We don't have the volume at the moment, but it is moving proportionally higher than SPY. And this is a clear break point. If Apple were to break 176.45 tomorrow, let's say, I would quickly sell some positions and add to this one, because this becomes a powerhouse that can drive the account. If it can break this level here, right, and actually you can extend this out. So let's extend this out here like that, and extend this one out here. And it's actually even closer than one might think, right? You're at kind of at this. There you go. So here we have flat resistance right there, horizontal resistance there. And then here, right there, right? So, all right, so that's 176.26. That's the point we're looking at. Breaks through there. Apple becomes a very, very strong play, very good long. Going to be watching that one very closely. It's a lot of areas. Moving along, Amazon, I closed the puts. I got it for what, 45 cents. I closed it and got 25 cents. Okay, it was one contract, $20. Coin, heartbreaking. Just utterly heartbreaking on Coin, because yesterday we do a call debit spread. We then take about 80 cents profit off the short calls. Then our long calls start going crazy all the way up, and we get all the way up to about, yesterday here, sorry, yesterday. 211. Those calls were printing. How many day trades did I have? 0. So now I'm looking at this today, and coin is about as weak as can be. Dropping down here, finally popping back up, and then stabilizing. Very similar, by the way, to CVX. Look at this. Down, up, stabilize. CVX. Down, up, stabilize. Not a little bit more severe on CVX. But of course, by the end of today, it wound up going back up to 208, which would have put the calls at the very least at break even. Instead, we lose $500 on coin because needed the buying power at that point to get a short, which we didn't have any at the moment. So I shorted Facebook. 220, 210, put debit spread. I know I still own shares of Facebook, but why did I short Facebook? Well, it's weak as shit. I mean, this thing has dropped below both these lines of support down into no person's land. This thing has just fallen into the abyss. Extremely weak. And it was kind of a simple decision when I need a short, so I put a search on to look for stocks that were down on the day, naturally, had high relative volume, and were relatively weak to the market. Around 20 stocks show up. Then, as I'm doing this, you could see I do this at $9.43, right? And what is the market doing then at 9.43? Well, at 9.43, right around here. Well, this is when I started looking, right around here, 9:20 or 12:20 your time or Eastern time, or not your time, whoever the hell's listening, whatever time is. Daylight saving time is the stupidest shit in the world. But time zones, well, again, another rant. I'm seeing 5 stacked green bars in a row. So what am I looking for? I'm looking for, on all these stocks that come up on that scan, on that search, I'm looking for stocks that at the same point in time, right here, I have 5 red bars in a row. Can't get any weaker than that, right? So I look through all these stocks and I see 3 or 4 that kind of match that description. Then it's just a matter of which one has the shittiest daily chart. Facebook won. Took out the put debit spread. That's how I found that one. Finally, I did, for 52 cents, a quick butterfly. I do love butterflies on Tesla. It's a $20 spread butterfly for 52 cents. So I'm pretty much on the profit side. If it comes in, it's $1,950 versus losing $50. And for the spread to come in, Tesla has to be around 1,020. Now, if it gets close to 1,000, this spread will be worth probably $4 or $5. I'll cash it in then, make it 800% return. Great. At that point, I had around $11 left, and I spent it on BHG. I got 2 $5 calls for 4 cents each, because I'm not going to have $11 burning a hole in our pocket. No way in hell. BHG, there it is. And you can see, look at this stock. which used to be debuted up here, IPO'd up here around what, 19, 20, then it just died. But now it's starting to get some volume and pops up above its average. Okay, well, I got two for 8 cents total, $8. So I think the risk reward here is pretty good. If I had more money, I probably would have gotten 5 or 10 of these. Yeah. So there it is. There we have it. That's our portfolio. Which, oddly enough, even though we're down about $200 today, I think we're in better shape than we were yesterday. I'm still slightly concerned that we're a little bit too much bullish tilted, and we're concentrated in Apple and NVDA, which both are tech and big tech. So they rise and fall together. I do not like having that. So tomorrow I'm going to hopefully try to get a alternative position than one of those two, depending on how they are performing. And you can see in after hours right now, well, please hold and read the damn wiki. NVIDIA is up actually a little bit. Apple is doing pretty well. It's 175.25. So this sticks. Apple's going to be doing great. Norton LifeLock, we need this to be around 30.30 tomorrow. Macy's actually started coming up, which is good. Chevron stays where it is. Facebook drops. Everything after hours is turning up great for us right now. And this Amazon butterfly, by the way, might actually pay off. Right now, we got it for $1.95, and right now it's worth $2.45. So we're up $50 on it. But if this thing comes in at $32.65 or thereabouts, we're looking at $2,500 for just this one butterfly. Well, $32.65 for Amazon, and it is currently at $32.30. One bad day, one good day, it could pop right in there. $2,500, well, bring us right back to where we need to be. Either way, we're still alive. We're still fighting. At one point, the account got down to $2,000, so we had a $1,000 turnaround on the account today. And I have to say, this is definitely eye-opening in the sense of, one, if you have a large account, you can do a lot, right? I can buy shares of Facebook or Tesla or whatever, and it drops. Oh, well, okay, I'll hold it. It's not like it's not going to go back up. It will eventually. I can hold it for as long as I want, right? If I have a medium account or a 30, 40K account or a small day trading account, I can day trade. I can, at the very least, if we had all these same exact trades, but the only difference was we had $30,000 in this account and not 5, we'd be up. We'd be up like, I don't know, close to $10,000 on a 30K account. Day trading it. All of these plays, there's only 1 or 2 that wouldn't have worked. You can go back through them all on the TraderSync Log and see when you could have closed it if it were a day trade. And you will find we would have been in profit. But to trade an account this size, actively trade it, which means you are actively trying to double this account. That is eye-opening in this choppy market. Because, there is a way to double these accounts, but it would take months, right? All you got to do is say, okay, look, I'm going to take, I don't know, Apple. It's a strong stock. It's doing well. And I am going to see here. Go to Apple. I'll show you what you would do if you wanted to take a long time to double it. Here, this is where major support is for Apple. It's right around 170, right? And then you get an upward sloping trend line here. It seems to match 170. So let's say 170, you get horizontal support and you get the 50-day moving average. And if you want to get safer, you can even climb down into this gap right here, right? 165, right below this candle, 165. So let's say 165. And above 165, you have two strong lines of support. Okay, so go to Apple right here, and you go out, let's say 11, so you go to March, 165. There you go, 165, 160. You're getting 58 cents credit there. So you go out a little bit more, let's say March 18th. 85. Okay. You put this in for $1, right? We'll say you had 5,000 in the account. Put this in for $1. You do 10 of them, right? If you were going to do 10 of them, it would cost $4,000 in margin. So you have $5,000. You're doing 10 of those for $1. You're going to get $1,000 off that. It's a bullish put spread out of the money. In order for this trade like this, 165, 160 bullish put spread for $1 credit onto March 18th. In order for a trade like that to stay in the money for you to cash in the full 1,000, right? Apple daily and load up. Let's get the daily chart here. Okay. Apple would have to go down, break through the 50 SMA, break through horizontal support, go all the way down to the bottom of this candle. Pretty much in the gap since earnings. In order for that to happen, there would have to be some serious collapse in the sector, in the market. Something would have to happen to the stock for you to break through all of that. And if indeed Apple is breaking down that badly, well, with your remaining $1,000 in funds, you would buy back the short puts and just let the long puts run on a weak stock and a weak market breaking through support. Either way, you're going to make your $1,000. Well, that's not a very good challenge, though, is it? Hey, I'm going to post once a month. I'm going to post one trade. At the end of that month, we're going to collect our $1,000, and then we're going to do it again. And I will see you in 5 months. Oh, we doubled our money. Well, that's not very fun. If this market keeps up like this, we may wind up doing it, but that is a conservative, easy way to do it. A lot of people use that method to grow small accounts. It's not particularly exciting, but it works. All right. Well, that's all for now. I will see you tomorrow. Have a good evening. And if you didn't understand what I was talking about, it's probably because you did not read the damn wiki. So you need to do that. Good night, everyone.